The cold hard truth of Pablo Escobar's empire wasn't just about drugs and violence. It was about cash. Billions of US dollars piling up faster than anyone could count, store, or even spend. This massive overflow of illicit money posed a fundamental problem for Escobar. At its peak, the Medellin cartel was making $420 million per week from cocaine sales in the US. For Escobar, the challenge wasn't making money, but making that money usable. You can't buy mansions, bribe officials, or fund a lavish lifestyle with suitcases full of unmarked cash. The money needed to be cleaned, or laundered, to appear as if it came from legal sources. This complex process of money laundering is usually broken down into 3 stages: placement, layering, and integration. And in each stage, the US banking system played a key role for Escobar. To understand how US banks facilitated this, you need to understand the financial world of the 70s and 80s. It was a very different place than today's tightly regulated and technologically advanced banking environment. One of the important laws at the time was the Secrecy Act. This law required banks to keep records of certain transactions and file a currency transaction report with the government for any cash transaction more than $10,000. The idea was to create a paper trail for large cash movements. However, in practice, the enforcement of this rule was weak. Many banks were more focused on attracting deposits and growing their business than scrutinizing the source of every dollar that came to them. There was no such thing as know your customer rules. Banks did not need to dig deeply into who their customers really were and where their money came from. This lack of detailed customer background meant that accounts could be opened with no issues. This created a perfect storm for criminal organizations like the Medellin cartel. Stage 1 of money laundering was the placement. It meant getting the cash in. The first and most important problem for Escobar's network was transforming huge quantities of physical US dollars into electronic funds within the legitimate banking system. The Secrecy Act's $10,000 limit was a hurdle, but the cartels found a simple way around it by structuring. This involved breaking down large amounts of cash into many smaller deposits. Each deposit purposefully kept a little below the $10,000 reporting threshold. For example, imagine Escobar's network had $500,000 in drug cash they needed to place. Instead of making one large deposit that would trigger a report, they would hire dozens of individuals known as Smurfs. These Smurfs were often individuals desperate for money. Each Smurf would be given a small amount, say $9,500. These Smurfs would then go to various banks within a city or across several cities, making these individual deposits into different accounts. They might deposit into personal accounts or even into accounts opened under fake names or for shell companies. Since each single deposit was below $10,000, it didn't automatically trigger a suspicion. The US banks processed these transactions as normal, innocent deposits. The money was slowly, deliberately, but effectively dripped into the system without raising any suspicion. Another clever tactic involved using front companies. These were seemingly legitimate, cash-intensive businesses that cartels bought or set up in the US. Examples included restaurants, nightclubs, car washes, and import-export businesses. A specific popular method was jewelry laundering through jewelry stores. A cartel might own a jewelry store in a busy shopping mall. On a typical day, the jewelry store might legitimately sell a few items and take in, say, $3,000 in real earnings. However, the cartel would instruct the store owners to inflate the daily earnings, claiming the store made $20,000 that day. They would then deposit the legitimate $3,000, along with $17,000 of drug money, into the jewelry store's US bank account. To the bank, it simply looked like a thriving retail business making large cash deposits. Once the money was in the bank, the jewelry store might then write checks from its legitimate account or wire transfer funds. Miami was the financial heart of Escobar's US operation. The influx of cash was so enormous in Miami that it created an unusual economic phenomenon in the 1980s. A study by the Federal Reserve showed that Florida had a $5.5 billion cash surplus at a time when the rest of the country was actually facing shortages of physical cash. It was a well-known secret that individuals would routinely walk into bank branches with duffel bags and suitcases filled with cash. These were often small denominations of $10, $20, or $50, reflecting their origin from street sales. The bills used to be damp, musty, or bundled haphazardly, sometimes even mixed with traces of drugs, which were all clear signs of their illicit origin. Yet, many bank managers accepted these deposits with no questions. Banks were eager for deposits, as more deposits meant more money banks could lend out and profit from. Some banks reportedly even had dedicated counting rooms equipped with high-speed money counters and extra staff specifically to handle the enormous influx of these often questionable cash sums. The priority was often processing the transaction, not questioning its source. This direct acceptance of large, suspicious cash amounts was a fundamental way U.S. banks helped the initial placement. Stage 2 was the layering. Once the drug money was successfully placed into U.S. bank accounts, it became electronic. The next crucial step was to clear its origin and make it nearly impossible to trace back to drug sales. It is known as the ping pong to offshore havens. From the U.S. bank accounts where the money was initially deposited, large sums were rapidly wired out to banks in tax haven countries. These locations included places like Panama, the Bahamas, the Cayman Islands, and Switzerland. Let's say $10 million, already deposited in a U.S. bank by Smurfs. The money is then wired to a bank account in Panama. The U.S. bank simply processes this outgoing international wire transfer as it was a standard service for its customers. At the time, there was little requirement for the U.S. bank to verify the account owner in the Panamanian bank. Also, Panama's laws protected the identity of account holders, making it difficult for U.S. banks to know the ultimate recipient. Once money comes to the Panama bank account, it would then immediately split the $10 million and send it further ahead, $4 million to another company in the Cayman Islands and the remaining $6 million to a different company in Switzerland. These are typically just shell companies, existing only on paper with no real business operations. From the Cayman Islands, they might further split its $4 million, sending portions to accounts in the Bahamas, Bermuda, or other tax havens. Switzerland might send its $6 million to a new account in Luxembourg, Hong Kong, or even back to Panama, but to a different bank and shell company. This rapid ping-ponging of funds, moving them quickly through numerous accounts in different banks in various countries using a web of shell companies, created an incredibly convoluted electronic trail. Each transfer added a layer of complexity, making it extremely difficult for any investigator to trace the money back to its original source in the U.S. drug sales. The idea was to create so many layers that the money's true origin became untraceable. One of the most powerful and insidious ways Escobar exploited U.S. banks was through correspondent accounts. Banks don't just deal with individuals, they let other banks open accounts with them. It is known as a correspondent account. For example, a bank in Panama can open an account in Bank of America or any other major bank in the U.S. This account is known as a correspondent account. Escobar's people exploited these features heavily. His cartel would set up or secretly buy stakes in offshore shell banks, which were banks that existed mainly on paper with no real physical presence or significant staff in the country where they were licensed. This bank then opens a correspondent account with any major U.S. bank. A cartel member wanting to move $5 million deposits money into a Panama bank. This offshore bank then sends money to the major U.S. bank in the U.S. in its correspondent account. The U.S. bank processes the transfer. It sees the transaction as a wire coming from an offshore bank, a legitimate foreign financial institution with which it has an established relationship. This approach allowed massive sums to move through the U.S. financial system, with the U.S. bank only seeing the foreign bank as its client, not the individual criminals behind the foreign bank. The cartel had significant influence over foreign bank operations. They could deposit funds, withdraw, and wire payments, all appearing legal because they were moving through a seemingly legitimate foreign bank, which in turn relied on its correspondent relationship with a major U.S. bank. One of the most famous examples of a bank deeply involved in laundering money for cartels, including Escobar's Medellin cartel, was the Bank of Credit and Commerce International. BCCI was a global bank registered in Luxembourg that gained a reputation for actively seeking out and handling deposits from criminal organizations. The bank's executives were known to openly welcome drug money deposits. The way BCCI operated made it an ideal partner for cartels. It had a complex global structure with branches and affiliates around the world, and importantly, it maintained numerous correspondent accounts with major U.S. banks. This allowed BCCI to move funds seamlessly through the U.S. financial system on behalf of its clients, many of whom were drug traffickers, with the U.S. correspondent banks often having limited knowledge of the true nature of BCCI's clients. One more method Escobar's cartel used was the black market peso exchange. The BMPE was one of the most ingenious and difficult-to-trace money laundering methods, heavily leveraging the global financial system, including U.S. banks. It transformed dirty drug dollars in the U.S. into clean Colombian pesos in Colombia, often by using legitimate businesses. Let's see how it worked. Let's say a Colombian drug dealer in Miami has $1 million in U.S. cash from drug sales. They want this money to be available as clean Colombian pesos back in Colombia. The dealer contacts a peso broker who operates in both Colombia and the U.S. This broker's main business is to exchange U.S. dollars for Colombian pesos. So this peso broker finds a legitimate Colombian importer. Let's say an importer in Colombia wants to import furniture worth $1 million from the US. So he needs $1 million to pay the US manufacturer. Now, the peso broker takes $1 million from the cartel and pays it to the US manufacturer, and the importer gives the same amount of pesos to the cartel's man in Colombia. This way, no money moves across the borders, and the US bank thinks that $1 million was paid for legitimate business by a Colombian importer. The stage 3 of money laundering is the integration. Integration is nothing but using the money in the US to buy different stuff. After the layering, the money is difficult to trace. Finally, the money is sent to any of the bank accounts in the US bank. The US bank thought the money was coming from legitimate companies in tax haven countries. Once the money is in a bank account, this money is then used to buy real estate, mansions, legitimate businesses, and restaurants. Basically, the money had effectively been transformed from illegal drug profits into seemingly legitimate capital within the U.S. financial system. This is how Escobar used and exploited the U.S. banking system to launder his money.